We're going to go through and review our Discord trades for the month. So we'll start off with the SPY 385 puts that we're loading at the end of the month heading into this one. It was a profitable trade. We entered on 527, exited on 610, it expired 617. Scaled out along the way, took some profits. Our highest fill was 1652. They did hit 19.6 though. So what was I seeing and why did I enter the trade? So this is going to be your SPY yearly on the day time frame, and then this is the 30 days since we're reviewing the month on the hourly. So I began adding these on the 27th, all right, which is this frame right here. So let's just outline this right here. And now you can see it right here. So this is a great entry. It was slightly early, but why was I adding there? So if we look at point of control on the yearly, we're at 439.68. We broke down, we have a change in structure and change in the state of delivery for price action. So we drop down, broke structure, come back up, and then fail again. So this area here, right below the lower value area, there's some liquidity here. You can run these stops and then fill out this slight imbalance. So if price would have, I was willing to let price come to right about the lower value area, the 420, but I really felt like 418 was the highest we could go. So I swung the puts, and then as she came down, we took profits, and I believe our final exit was on the 16th. So that would have been right here, right? So sold right around here, and she did end up tapping down to this level, this 362.17. So it was a great trade, but this is what I was seeing when I got in. It was just a change in the state of delivery regarding price action. So our next one was GameStop on the 2nd. These are just little scalps, but we can check it out. So GameStop on the 2nd was this day, right here. Oh, okay. So this is the scalp. So GameStop, I was targeting the 151 level, which was the point of control. We had a structure shift right here, came down, and some people would say, okay, we had a double bottom, so you could have added. That was a little risky to me. I really wanted to see some explosion in the price action. So as it broke above this high, retraced down into this candle. I would have liked to get back in here, but it was just a scalp, so played her on the upside. But that was just a scalp. It wasn't a swing, so it's harder to review that because it requires you to be quick on your toes. I did put in here as a gamma scalp, and it had a 9 EMA 21 SMA cross. That was a profitable trade for us. UVIXI calls. These were actually green. I just didn't take profit on them. I did get a little greedy there, but as you can see on the entry date, 6/6/02, that would have been profitable if it was pushed out one more week, because on 6/02 we were still at this level, right? We were rejecting. Oh, well, let me bring back up SPY so you can see it. On 6/02 we were at this high, and this crash down here, this flush, would have made UVXY go. Yeah. Stay here. And it did end up hitting this high right here of 18.1. So my timing was just off on that one. GameStop was another gamma scalp. Those ones, there's no point of reviewing those really. When I call those, it's because I am seeing a 921 cross and a change in the state of delivery regarding price action. This was entered 6.3, expired 6.3, so this is just a 0 DTE play right here. NVIDIA, same thing, 0 DTE, Square. So I put in here, I really should have cut this. I had a lot of open positions. So with Square, let's review this since it was wrong. The date on that is 6/8 and expired 6/17. So we're looking at this time frame. And why did I enter on 6/8? So see, and this is what I mean. I don't even know what I was seeing when I entered this, but I did put that I had too many open positions and it did expire worthless. So this is just me not managing my positions correctly. I had this 71 level. There's something I liked about that. And I might have completely misread this. And what did I say that was? That was a 92 call? That's real far out of the money. 92. Six two. We're hunting her down right here. Yep, right here. So, point of control bounce right here on the 30-day hourly, and we already came up and touched this upper value area. I believe I was thinking that we were going to break through this level and then head up to yearly point of control at 109. And then the worst part about it is the second that we lost this point of control, 8308, I should have cut. Instantly should have cut. And even if I was only targeting a drawdown to this level right here, this imbalance, it's still too risky at that point, especially if my overall thesis on the market is bearish. So this is a good example of, if you have 5 to 10 positions open and you have a hard time keeping track of them all, just bring it down. I've been learning more about myself where 4 positions is generally good enough for me, because I like to have 3 charts on each position, so that's 12 charts. And then I'm monitoring SPY and Qs and the dollar, and it becomes too much. Okay, so SPY 400 calls entered on the 13th, expiring on the 15th of this coming month. And I had a couple of these, and I did book some profits on them. So on 6/13 for SPY, right here, almost pretty much caught bottom. Right? So in 6/13, I said the 400 calls. Well, what did I think about the 400 calls? This gap fill. And I covered this on the last video. I said, we definitely need to fill out this imbalance, and this one up here, I'm not sure. I said at 3, what did I say? I said 385, 390, 395, and then 400 were my targets. I said by 400, I would totally be pivoting. So I went with the 400 strike, caught this run up, right? Filled out here. And I still would like to see that get done, but I only have runners, and I actually switched to some long puts, which today we had a little move here. So that position's actually red. But anyway, I was able to cash in. That's what I saw when I took that. And as you can see right here on this upper value area, 398.4, and then the overhead supply level would be 411. So look for the market to try and take out liquidity here, run these. BBBY, this is kind of like a lotto. NVIDIA, 615, expiring 617. We took these for a little scalp. Let's check out this play. 615 and 617 on NVIDIA. So right here. Oh, we entered and exited in the same day, so this was a scalp on NVIDIA. So 615 to 616 looks like we captured this move here. Okay, right here. So the market open. We have our lower value at 160.45. We came down on this candle here. This was a low of 159.26. All right. When we came down, we tapped in, we filled this imbalance, and then ripped up. And then we sold the following day, which, yep, right here, we sold the open right here at this high. So, $6.15, that's $6.14. Yeah, that's what we played. Yeah, we sold right here, same day. Just rode that wave. Here's more of the SPY 400. Shop was a good one. That really helped the account this month, especially if you were able to get a bunch. So when we look on the yearly, it doesn't even look like Shop did anything special, just what it normally did. But that's the nice thing about um, the leverage in options. So see on this chart right here, we have 29.76, but it was 297.60, right? So we have respected, and now we're back down to this level. But at this point, this is where we entered, was right here on this one. Boom. So you want to know what would be a safe entry for this? A safe entry would be, came up here, broke this little structure right here, came down, tested it, right? Fill in this imbalance left behind here, and then run. And then you would wait for this high to break. Once this broke, let it grab liquidity, come down, and then you're looking to get filled in this bottom range right here. So you wouldn't have gotten filled if you left it here. But if you would have allowed yourself a little bit of drawdown, you would have. Came in, touched it, ran. We were all out of this play right around like 380. Where is it? Shop 400 call, 616 we entered, and we exited on the 23rd, which is this day right here. this final candle actually. Now isn't that insane? I actually believe I alerted the cut on this. This went higher. Yeah, it went up to here. So what I saw when I did this play was we have these relative equal lows. Enter. Where would my stop be? Right here. What was my risk reward on that? I'm gonna lose 5%, right? And Shop's bid ask spread is so liquid that, I mean, maybe I lose 10% with slippage, but I'm not truly worried about that, right? 10% to make my run up here was to 361 at the time before the split. So my risk reward profile was great and able to capture that move. Now, why did I exit instead of wait for it to come down, go up, leg up again? Well, there's our point of control was right around this level, and we broke through it, but we had this upper value area. Now there is a ton of buy stops here, right? And we could run that, but then at that point I'm getting greedy, right? So we broke through point of control. Point of control is a magnet. It just sucks price back up to it, and it sucks price was moving away from it and tries to bring it back. So once we got through it, I felt like we had already ran all this liquidity here. Okay. Um, so I did miss out an additional upside, but as you can see, I mean, now that we can see past tense, the play played out, but it was the right decision. So this area down here where I said would have been your safer entry would be to break through there, structure shift, come back down, enter here, right? That is your confirmation that you could be ready to move up and run all of these buy stops. And as you see right now, price has came down to it, and who knows what it'll do, but this was a safe entry. I was happy with this play for sure. So these are still the SPY 400s. Airbnb, this was a 0DT scalp. I called out Airbnb, Square, and GameStop that same day because we were structure shifting all over the place. So SPY had a dispersion in price, and it came back in, respected it. I liked that. And the GameStop one ended up being, I took quick profits on these. The GameStop one actually went pretty well. It went from 0.48 to 168. Here's some more that I lost on. These were small plays. And then Snow was a good one. So what I saw with Snow was I saw flow. And I remember when it came in, and the entry on that was 622, and it didn't expire till August, but 622 was this day. Oh yeah, I already have it entered. So entered Snow on this candle, filled in here, and then she ran, ended up selling way too soon. Exited on the 24th, which is this day, right? So I exited here. I mean, look at this candle. So I guess I didn't exit too soon, but this right here needs to be filled out, even if it's going to remain bullish. This area down to point of control, it needs to happen. So you could see it run back up to this high and then play it short down into here. But I saw some flow that I liked, and the setup was looking good. It had tons of time on the play. I just was, I don't want to say I was paper hands, but sometimes when it's feeling pretty euphoric, you know. So, $1,500 for 2 days, I'll take it. Even though it was only one contract, it was good. Upstart 40 call. So this one's been a pain for me, and I've always had a hard time with Upstart since the decline, because if you look, there's times where it breaks structure and runs, this buy side liquidity, but then it just instantly falls down. So I feel like I know Upstart's a retail favorite equity. You got your Upstart, your Square, Farm, all your fintech, your GameStop, AMC, let's say. These prices are heavily manipulated, especially when it comes to options. So I don't even know why I still play them, to be honest. But there was something I saw that I liked when I entered this Upstart, right? Just like all the other times I have. 622, which was, oh, I do have an arrow on it. Okay. Yep, right here. Return to point of control. I could have waited for an entry down here, but I bought some time on it. We're sitting at point of control. Falls down. I enter here. Have a bit of a drawdown. We come back up. We come back to break even, and then it went green. And when it went green, I do remember I scaled out. Yeah, I took $60 3 times, right? And unfortunately, I bought more, and It seems like that happens sometimes where your really good plays you didn't buy enough, and then your bad plays you kind of bought more. And maybe that's a rule I have to change about myself regarding fintech. Fintech, I should always scale down. But anyway, went green, stayed up here, and then this powerful candle down. And I remember being down 20% on this play, and I said I should cut this. I knew not to average down, I've learned that lesson, but I said I should cut this because this isn't right. When you see heavy dispersion like this, that is not bullish at all. I mean, yeah, I can say that now because I've seen where price is and I'm down like 60% on my calls. But if I'm not seeing these powerful candles up and I'm only seeing them down, it's very clear that the people up here, they just don't want to own this, right? And no matter how far it's fallen from 401 down to 35 bucks, 32 bucks, if people don't want to buy it, it can go lower, right? It went to $25. Who's to say it won't be $13 in 2 months, right? Like you don't know. And as price action traders, we have to understand like this right here is a bad sign when you see something like this, especially if you see it down and then it creates a fair value gap right here, um, right there, right from this candle to this candle, imbalance, taps into the imbalance, and then powerful candles down. That's not a good sign at all. So that's a bad play, and right now I still do have some open positions swinging into next month, but I pretty much wrote them off at this point. New Micron. So Micron, our entry was on 622. So same as these other ones, yeah. Entered on this day right here. Sorry you couldn't see it. So I entered on this day, and it was weak. It had relative weakness compared to the market. I remember SPY was running, and Mu was just dipping. And actually AMD was going down too, so all semis were having a bad day. And I just felt like there's a divergence here where if for SPY to move up, it's going to pull up other, if it's going to pull up the whole market, right? You're going to see more people come in with some risk on. So I did cut this a little bit early. I think this candle right here, we were up 30%. 622, exited 624, which is this day right here. Yeah, the second we got to point of control, I was out. And it was the right call. And I knew it the second I bought it that it was a little weaker than I thought. And what you want to see is relative strength. You want something to be holding its ground and while the market's dropping. Because when the market goes up, it's ready to roll. It already has wind at its back. So we cut this for a profit. I'm happy with that trade because I recognized that it wasn't a good trade right away. Affirm, 19.5 calls. So Affirm, another fintech. Entered right here's my entry. So entered Affirm. I was looking for $25. I remember at the time I was looking for 25 because that was the yearly point of control, and there was a slight imbalance above it. So it was able to actually tap up into the 2403. We skimmed out a bunch of it, and we left a runner. 624, 624, 628. So look at this. So we, 213 in premium's good. You can see we sold some others for 138. Anyone who acts like they can snipe every top and every bottom, they're lying to you. I mean, because I'm really watching these. I'm making calculated decisions, and you guys can see my live entries and exits, and There's times where you let a runner run and it runs big, and then there's other times your runners go red, right? But the main purpose is to reduce the risk. So whatever we put in, if we're skimming along the way and we get 100%, 200%, the only reason you should see ones like this up here with the SPY do this is because I secured along the way, right? I mean, look at this. I only took $159 in profit, $259 in profit, and I took a lot off. And I can say in hindsight, man, I should have held because I would have gotten $1,400 per call, right? 770% I would have gotten. Um, that is a dangerous mindset. You will blow up your account if you think that way. The only way that you can do something like this is if you're skimming along the way, because then what's the most you're going to risk? It's your profit, right? So as long as you can protect your account, you can do some other things. But anyways, we have one Affirm left open. Curious to see where it goes. AMD. So this was AMD 87 call. This one kind of burned me a little bit as well. So we entered AMD right down here, which is there. And why did we enter there? It was a solid risk reward profile, right? Because if it broke, the most I could lose was 10%. So I was willing to take that risk, took AMD, ran her back up here through the upper value area. It did break structure here, and this is a nice state of delivery. Now, price could have returned to here, and I still would have been fine with it, but the issue is the overall market, right? The overall trend is bearish. It's leg down, come up, run liquidity, leg down. Try to do it again, leg down. Because my target rate was this range right here, this gap fill. So I was expecting it to bounce here, and it didn't. It actually had huge dispersion down and just continued. But who's to say what they're going to do in the future? They could run these stops, run these all the way back up into this range, right? And then bring her down lower if they wanted to. Because yearly point of control is 107, and on this, even the hourly for the month, it was 101, right? We took 87 calls, we ran them up, took some profit, but should have just exited when I saw this right here. But because I have that extra 2 weeks, I still believe that if SPY can't take out that recent swing low, that it can move up, because you got a lot of bait right here. These are a lot of stops you can run. You could engineer crazy liquidity, and then create a nice bull trap. So GameStop, small one. Oh, I actually booked the losses on the AMD. Yeah, look at that. This was a good play gone bad, right? $220 profit on 2 of them, then lost $158 on 2 of them. So, and then lost 158 on that one. So it pretty much was a break-even trade. SPY, we got 388 puts. We entered those. Let me see. We got SPY puts, Google, Upstart puts. Upstart puts that were a hedge. So we shorted calls. Price was dripping real bad that day, and then when I felt like it was, it went down to the point where it had a brief change in structure. We bought back the calls, bought a put to use as our hedge, and then we cashed in the hedge later on. But Google was nice. Google was a trade I actually did while I was on my cell phone. So, oh, look at this. You see this? This is this box right here. This was my initial short target zone for Google. If Google returned to this box, I was shorting it all day, right? And it broke out of the box, came back in, went short. I stayed short, and then when it returned back up here for the yearly point of control, I added more, because this initial breakdown right here was a change in structure, right? And you can break structure and consolidate for a second and tap liquidity high and then break down. But anyway, so this Google put was 627, sold the next day. So 627 is right here. And I remember it happened a little late on the 27th. It was like the end of the day. So ran up, left this imbalance behind. This candle needs mitigation. So entered the put. We gapped up the following day, right? Gapped up. And I remember when I called it, I said, you can wait till tomorrow morning to enter this, but I didn't. I entered like the last 2 minutes of the day. And if you entered the next day, you got a crazy gain because we gapped up, instantly rejected, and then came back down. So what was I looking for when I called it here? Well, I was looking for this imbalance to get filled, and the market was overall bearish. I felt like there was a lot of tones of bearishness. My target was this level, which is the 2230, and I was looking. When someone asked me my price target, I said 2100 because that's this level. I was looking for these to break, right? Because there's some liquidity down here. I mean, obviously, there are stop losses here, right? And what's price going to do? It's going to hunt those stops. So, price here, tap in, fill into here, and then if that truly is a bottom, then she can run. But anyway, so I ended up selling right at the end of the day, which was, it was still the 28th. So right here, right? It was resting on point of control. Very next day, what'd she do? Crazy, crazy drop, right? And price could probably still return to this 2209 level and then reject down and take out these swing lows. But yeah, Google was a crazy one. And then recently the SPY 378 and 369 puts. So the these were 0 DT. That's right. I played those yesterday. So the 369 puts on SPY. So that means pretty much you'd say, oh, you're leaning SPY bearish for this coming week. Well, today was interesting. I didn't trade today. So it's hard to say because where SPY ended the day off, it was like 380, 381 level. All right. And that puts it back to here. So it does need to break here. And if you're looking for an optimal entry on adding more puts, it would be that level, 385, right? Because there's an imbalance in this candle. So if it broke this level, you'd take her to the 386, 385 range and then look for continuation down. But the reason that I called these was because I already have the 400 call runners. So I have the 400 call runners. I have a 388 put that's in the money, and then I have these 370s. So I'm kind of positioned now where I don't care what happens as long as it happens quick, right? Because the only thing I'm fighting is theta, right? We expire on the 15th, and I just need this move to happen. So if this move can come back up and really if it could go for this gap fill here, right? If it could fill this, I'd be happy. I'd cash out of my 400s. I'd take my 388s off the table the second that we have a change in the state of delivery, meaning big candles like this, right? Because if you were bullish, you could say, hey, well, you know what? It did come down, it gapped down, but it filled out this imbalance, and now she's returning up to this level. And it's above the point of control. And that is, if that's your thesis, that's okay. I'm not saying it's wrong, right? Because then, well, then my next price target would be here. So, I'm just calling it how I'm playing it. And really, this chop here that we're seeing in the market, this can chop you up, especially with options as short expirations. I mean, 14 days doesn't sound like a lot, or doesn't, or sounds kind of far away, but it really isn't, right? We're used to scalping, you know, 3-4 DTE. So a lot of these moves are happening overnight, and anything, it's kind of up in the air. So really, you could flatten all positions and just say, well, let me wait, right? Let me get through this chop. Let me see if SPY can prove that it has put in a higher low. But anyway, so that's the those were the trades for the month. You know, a brief rundown of them at least. Um, let's go back into. Sorry about all of this you're seeing. Let's go back into the total trades. So the P&L, you know, this is just derived from, you know, the total profit on this. Okay. Um, so hypothetically, of all the trades that I put in, because I do put the quantities as well, you would have made a total of 25,000 this month, and you know, if this was your starting balance at $1,000, you would have made about 11 grand. That's, I don't even know if this formula is right, but assume this formula is correct. If you made 11,600, right? I would not expect that to happen every month. This was a really good month, and a lot of it came from this us catching the SPY top with the 385 puts. I mean, we had a 20 point gap down, 20 point gap down, and we went deep in the money with that, and we had the runners, we had the size. And as you can see, as the month went on, I started dropping my size in a lot of these plays. And the reason that I was dropping size was because I was getting a little unsure. When you get volatile moves like that, you really don't know. You don't know how price is going to react overnight to any bit of news. So especially if you're fighting trend with, you know, the market's bearish, we're going call side, those positions, yes, they can have a great return, but the sizing needs to be lower because it's more likely to be wrong. So that's just, you know, I'm just warning you, like, if you have a $10,000 account, do not throw $10,000 on the very first play that I call. You know, if anything, $200 would be your limit. But so the note section, once again, you know, gamma scalps are pretty much just day trades, right? Straight day trades. Um, got greedy on the UVXY and didn't have enough time, so you know, let's learn from that. If you're green, take it. If it runs to, you know, 1,600%, don't be mad at yourself, right? Because you have to remember the times where it went against you. This trade, the SPY, 411 put day trade, I said at 10 minutes, right? Because I was fighting theta. There was like 3 hours left in the day, and it didn't produce until 12 minutes. Took a $13 loss. It ended up going to like $2. So, but my rules of the trade were, on the time frame I was operating on, it should have happened within 5 candles, and it didn't. So I was just following my rules there. Square, too many open positions, too many. You know, so there's no reason that something should expire worthless. The second that, you know, it even, I mean, if it expires worthless because it was consolidating, that's one thing. You just ran out of time. But even then, you would know, like, okay, I need to roll out. This mismanagement here was me not seeing the chart, pretty much. The SPY 400 calls approaching end of a volatility regime began adding for bounce. So what does this mean? This is dealer exposure at the gamma level. I wanted 20 for this, for the 400 calls, but it happened so fast. It was rapid. Ryan Cohen just following his strikes on this. This was a whale follow for LUV, Southwest Airlines. I followed a whale's flow into this position, and they bailed. So I took $60 loss on that. The Nvidia 172.5 call. When you see PSAR pivot buy, that's parabolic super trend. well, parabolic support and resistance, but I used super trend with it, and it triggered a buy, and that's when I jumped in and continued to add the 400 calls. The shop was 289 or 298, swing low was 297, pushed it out for further upside. And Square. Oh, okay. That one on Square I got caught up on. That's because I was short puts. Yeah, I sold to open the 50 put. Right? And then his price ran, was able to buy it back for 55%. So I made $182. That snow call, if I would have went with weeklies, they would have 10 bagged. And I would have been able to buy a lot more, right? Because I had 18.3 exposed, which is $1,800 exposed. Where if I would have went with the weeklies, I could have gotten 5 to 6 times as much for half the price, right? Upstart, this one I shorted calls against it. Micron legged up, but no dollar flow behind it. Cut early. Yeah, same thing. This is what I told you guys. And then Affirm, looking for that $25.36 price target. That was because that's that yearly point of control now. AMD went from 107%, and we secured our cost basis, and now we're down like 20% when I updated this. It's actually down more now. And he sold the swing low. Guess what? It didn't. So we sold it, booked our loss on that. And GameStop 150 call, right? Took a loss on this. This one actually made me mad because what did I say? It was a failed trade. It had a 15-minute pivot break on volume, increasing volume. It had a 921 cross on the 3, but it had no volume on the trend change, right? So even though the 9 crossed the 21, there was no volume to support it. Then it hesitated for a second, and then it popped. And when it popped, I waited for a retracement. It didn't give me that, but I was on the 1 minute, right? So normally on GameStop, it's the 5 to 10 minute time frame that you'll start to see some major jumps. So I did get in, and when I got in, it went up more, was green on it, and I had company show up, and I remember I said I should cut this right now because I can't manage this trade. But I said, I will put my stop loss at 2, and I'll put my sell limit at 3. And I was typing this while I was in front of the guy that stopped by. And, that's not even good risk reward right there, right? So at this point, my entry is 2.5. I'm trying to take profit at 3, but my stop loss is at 2. So my risk reward is 1 to 1. That's not good, So what I should have done was just cut right then and there. I was still at break even, slightly green even, and I should have just taken it. But that's the benefit of hindsight. I really thought that GameStop was ready to go to my target, which was the 151 level. So that was a failed trade. Oh, soft review, engineered liquidity grab. I'm going to show you guys that. I'm going to show you what that looks like, an engineered liquidity grab. That date was the 27th. So yeah, it's right in this time frame right here. We're going to go from the hourly down into like the 5-day, 15-minute, and right here. Okay. So price dropped down, began climbing, and I believe right here. Okay. So I remember it crossed here, but look at this volume. It was going down. It was dropping down. And this is on the 15-minute, but I was on, let me just open this up to 15 days, and let me show you the 3-minute. Okay. On the 27th, which is, right, it was the 27th? Yeah. 27th. So this day. Oh, right here. Okay. So got under all of its moving averages, was bearish, came through here, broke structure, right? See here? High, broke the high. Comes back down, taps in to this fair value gap. So taps the fair value gap and then begins moving. But as it begins moving, look at volume, right? So I'm like, oh, I don't know what's gonna happen here. And then I saw volume picked up a little, but it's still nothing, right? And now we're just at this level right here. You get the idea. We're at this level, and then boom, volume pop right there. So I waited for the price to come back in because generally you can. Generally you can retrace this on a wick right here. This would be your entry. Okay. I didn't get that. Got in here. Price came up, came back down, back up to here, and then stalled. And I ended up cutting where? Well, I believe I cut right here on this level. So, and my entry was like, let's just say it was like there. But you can flip that to the other way if you want. I don't really care. Yes, I do care. So, you know, GameStop's hard. It's hard for anybody. But, yeah, it faked me out. So this is engineered liquidity. How? Okay. Because if I was zoomed out a little bit, I would see we have dispersion of price action down, right? So these are imbalances that are left behind in here. Now you can see these wicks came up, filled this imbalance, kind of filled this one, yes. But on a larger time frame, which I was looking at that 15-minute right here, right? Price didn't really tap into there. And these are ideal short entries when you have dispersion, right? When does it hit it? Right where I entered. So I was exit liquidity. And that's funny to say, but yeah, they got me. So if I was out on the 15, I would have saw this. So, yeah, they purposely dipped it lower, broke structure, hammered the volume. As they hammered the volume, what happens? People like me jump in. So I jump in. They use me for exit liquidity, fade me. Boom. So, I mean, they didn't take a ton of money from me, like $400, but, you know, we have to learn from lessons like this, right? You need to remember things like this so you can make sure they don't happen again. Okay, but that's how you engineer liquidity. You target where people's stops are or where they believe a break is, and then you use them to trap more longs in order to take a short. Right. And I could argue right now as I'm looking at this that price is in a position right now to trap either side because we are at the lower value area on the yearly, and we're trapped between the lower value area and the point of control. Right. Then this imbalance down here still needs to get filled. So they could try to bring her up one more time. And if I were making the market, I would bring them to here. Tap into this range right here, this 142, one more time, and then drive her down into this level here, the low 100. All right, anyways, just wanted to review those. I hope you guys have a good 4th of July. I'll catch you in a couple of days. Send some chart requests over, and we can review what's going on.